States across the country are running out of money. We know that. That means a big red flag for investors. Let's bring in Joseph Fichera. He's CEO of Saber Partners. Are you suggesting, Joseph, that we should have a red flag on all municipal bonds?
No, we don't need to have a one-size-fits-all condemnation of municipal bonds or one to four of them. I think you have to see that this market has been opaque and not transparent. It needs major reform. It's because we don't have good information for investors to know which are the good ones and which are the bad ones.
All right, we need you to tell us where is the red flag. Which section of the, what municipal bonds should I avoid, bearing in mind the near bankruptcy of several states?
Yes, well, I think you want to look at people who are not current in their disclosures in terms of providing investors complete information.
California?
No, California, the state as a whole is good in its disclosures, but you get down to smaller districts and other types of issuers who are way late in providing disclosure statements. And we have no regulation. Remember, we have no major regulation.
I don't know. I'm just an ordinary guy sitting out there in New Jersey. I want to invest in municipal bonds. How do I know what their disclosure is, for heaven's sake? I don't know.
I think that you've hit the exact point, was that there is no major regulator like the SEC or no central depository that creates standards. So you can't know. The E-Trade baby has more information on a Hong Kong stock than be able to invest in municipal bonds. And the need for perhaps a municipal market exchange or something like the NYSE for bonds or something that could provide you information would be helpful.
But
we don't have that.
It's not there. So my
very slowly movement.
Well, my reaction would be, I'm not touching this with a 10-foot pole. Any of them. You say municipal bond to me, and I'll run a mile.
Now, well, the reason you'll be missing a lot of opportunities is they often pay much higher yields versus corporate securities for similar credits. So there are, you sort of get compensated for this lack of disclosure, but that's a hidden tax to taxpayers and ratepayers.
The fact that they have to pay so much higher yield points to the risk, and ironically, aren't these peddled to older people out there who shouldn't even be taking these sort of risks?
No, there's about 1/3 of the securities that are held directly by individuals, and it's usually high net worth individuals because of the tax advantages for the tax exemption of them. And then other individuals hold them through mutual funds and other institutional things. Right. But the moral hazard here is that you sort of treat people who are very good, water companies, utilities, who are highly rated, AA and AAA, don't get the benefit of their goodness compared to corporations. They pay higher, so you have hidden taxes and higher fees. The SEC has started a major investigation. The financial reform bill only did few things.
Look,
you need more.
Yeah, but I'm going to run a mile. I mean, I hear these red flags. I hear bankruptcy on the part of some states, and I just walk away from it. Because
would you do the same thing in the corporate market? That's what happens. There are things. What you want to do is reward the good and stay away from the bad.
But I don't have the information at my disposal. That's my problem here.
Right, and so therefore you should want the SEC or the legislation to reform that, so there won't be a double standard anymore.
It's like challenging this new financial regulation through the courts. It takes years to get something like this, and the problem is now. Joseph Fichera, we're out of time.